episode here at Tribal Trades, the stocks show coming to you on Sunday. And boy, do we have a show for you today. The bloodbath is, many now are saying, this could be like a 1929 style Great Depression style dump. We're going to debate that. We're going to discuss that. And we're going to look at the charts. We're going to look at some historical data as well as the cheat sheet. Before we do all that, smash the like button. This does help get this channel out to more people and does help support the channel, as does your wonderful comments that you take the time to write. I take the time to read it and respond. And I know many of you have noticed that I've got my bearish red hat on. Anytime this tends to happen, I do put the bearish red hat on just to make sure it's fitting with the occasion of some red in the markets. All right, well, let's jump first and foremost to the news. And first of all, 71% of the S&P 500 stocks have crashed below the lower Bollinger Band. Every time this has happened, this is what the S&P 500 has done. And we can see that historically, it's just worked out pretty well. No matter what's kind of happened, it's worked out pretty well 3, 6 months, a year later. Even in some of these times that we had the drop, it did take a few months, but it worked itself out. Okay, and then of course we have the VIX. The VIX ended the week at 45.3, the volatility index. If you don't know what the VIX is, you can add that to your charts. Among the highest weekly closes in history. What happened following the highest VIX level? Let's have a look and see again. Whenever we've had these very high VIX levels, the returns after 1, 2, 3, 4, and 5 years has absolutely been fabulous. I see a theme here developing. Then we have the S&P 500, which fell 10% over the last 2 trading days, which was the 5th biggest two-day decline since 1950. And then look again what has happened each subsequent year that this has happened. These are the gains that have come as a result. And then let's have a look. The S&P 500 plunged again, and we're going to look another data field. This is a little bit different. Anytime it plunged 10% in more than 2 sessions within 2 months of an all-time high. And again, we see that 12 months later, everything was looking pretty good. Maybe not 1929, and we'll get to that in just a moment there. And of course, we've got the last 2 times that the fear and greeting index was 4 or lower. People, it's almost at 0. September 2008 and March 2020. And we know what returns the stock market has given since those crashes down, okay? And then we have the Dow Jones, nothing to see here, ignore, and it seems like that part ignored. All of a sudden, we're panicking over here, okay? And then we just witnessed history, major single day S&P 500 day drops. And this has certainly been a doozy. That was a big one, April 4th. And many people are fearing what might happen on Monday. And this is not the first person here that has posted these charts here about 1987 and what could possibly tomorrow. And then also we have our good friend Jim Cramer calling for Black Monday. Well, I'm pretty inverse Jim Cramer, so I'm going with odds now favor the October 87 pattern if we do. But again, here's the deal. It recovered. I showed you the data from the crashes from 87 and so forth. And some people have even talked about 1929 Great Depression. I just do want to add to that a couple of things. And people say, you know, they always worry, oh, this time it's different. Well, it is different. It is different. It's 100 years later almost, number one. Lots have changed. Number 2, the Fed had interest rates at 10%. They had no idea what they were doing to help stop and rescue. There was no money printer and there was no quantitative easing. In other words, the Fed wasn't buying. Okay. So these are 3 things that the Fed, first of all, we're nowhere near 10%. And if anything, if things go from bad to worse as far as prices go, the Fed's going to cut rates. They're going to pause the market. There's circuit breakers in place to pause trading. They will lower interest rates. They will print money, and they will start buying again, and they will add to their balance book, and there will be quantitative easing. Okay, so that's my thoughts on it. That doesn't mean I'm right, and I know some of you may disagree, and that doesn't mean that there may not be some more bloodbath on Monday, but I do want to talk to you and see what areas might be some good places to buy. And if we look at the S&P 500 here, we can see that the 200-week moving average has historically been pretty good place to buy. When we saw that drop down in 2022, that would have been a great place to pick up some stocks. And again, we saw the COVID crash. We went a little bit below that in 2020. That would have been another great time. And just even a little bit earlier than that, we saw a drop down in December. That would have been another good time. And so you really do look at the 200. I'm not going to keep going back through history, but that's generally been a good time. And it's also been a pretty good time to buy the individual stocks. Okay, now I have updated also my cheat sheet, so make sure that you check out. That's available in the Discord. This is my new and updated Discord only cheat sheet. And you can see I've color coded here. I'm going to be adding some more color codes and entries and take profit levels as well there. And if we go a little bit lower, we're going to obviously adjust that as needed there. Okay, so let's look at some of these stocks and see how far they are away from their 200-week moving average, because as we can see with Apple, the same thing, if you'd bought it down around near this, boy, we've got to really come back for Apple, back here to 2018, there has been a very strong, even in these dips, it didn't even get down, where was the 2020 drop there? I don't even think, it didn't even get down to the 200 week. So Apple, you might want to buy that a little bit higher. Let's have a look at Apple and see how far that is away. And boy, we are close. We have not seen Apple come down to this level since 2008. So that's like 7 years ago. So as you can see, for each of these times, this has ended up being good areas to buy. So I didn't deploy everything in here. I just bought a chunk here. And if we come down to here, I'll buy a chunk more as well, because historically that's been a good place to buy there. That 200-week moving average is 178 at the moment there. And then if we jump to Amazon, that level is down there at 152. Okay, so 152. Now we did see it go quite significantly under that by around $40 in the drop in 2022. So it's very interesting that we saw that with Amazon. So just be careful if buying here, that could see a much further drop down to the 100 EMA on the monthly time frame. Okay, so just be careful with that one. But this would be a good place to buy here at 153 and then down here at 126. So there's a couple of levels there. Coinbase is absolutely taking an absolute hammering. It's already at its 200-week moving average there at 159. In fact, is it lower? No, is it lower than that? It's just around that level right now. So that would be interesting. Otherwise, a little bit further down around here, this 146 level would be my next level there. Obviously, Coinbase is one that does and can breach through that 200 moving average. We saw that happen just last year. It went significantly under it there around 213. It went all the way down to 170. It came all the way down actually to the 20 EMA on the monthly time frame, which is melted through at the moment. So just be a little bit more cautious with this one. This is one where I nibbled here, added a little bit, but I would certainly be cautious skating down to much lower levels, particularly if the crypto market takes a little bit more of a drop. If we look at Google here, again, coming down to its 200-week moving average is at $136. And again, if we saw a further break down, maybe 106 at the 100 EMA on the monthly. Again, whenever Google has hit that red 200-week moving average, that historically has been a very, very good time to pick some up. So again, I would be adding some there as well. As we go further down the list, we've got Meta. Now, the 200-week moving average is a long way away. It's a scary thought of seeing Meta come all the way down to $346. So right now it's at the 20 EMA. On the monthly time frame there at 494. I would think for me, what's a good possible entry there for Meta? Maybe if we make a double bottom there at about 400 and that 415 or so, 400 maybe even there. 430, somewhere between 400 and 430 wouldn't be too bad as an initial entry, and then obviously the 200-week moving average at 340. MicroStrategy, again, very much correlated with Bitcoin, and Bitcoin's doing okay at the moment. Its 200-week moving average is all the way down to 96. So again, we're more looking at maybe around the $200 level there for MicroStrategy, which is the 20 EMA on the monthly, but $240 also would be an area that I would start to add there. That's at the 50-week moving average there. NVIDIA, the 200-week moving average is all the way down, boy oh boy, at $54. However, I would probably start the nibble at 90 and then 75 into NVIDIA there, okay? And then let's look at the next one here, Palantir. These are the ones that we're trading on the cheat sheet. The 200-week is a long way down at $25. That would be some drop. And so I would probably look at the $70 and possibly the 200-day moving average at around 58 at the moment. That might be up at 60. So around the $60 to $70 area, that would be an area to add. And then the 50-week moving average down at 52. And if we're getting lower than that, I should have a new show by then. $45 there would be the next one after that you can mark. So I'm kind of giving you some real bear case, bear market, big correction. This is the kind of territory that we're in. We could go a little bit lower here before this get resolved, and it could get a little bit scary, but I have been deploying some capital and will continue to deploy on any subsequent further drops. And then let's look at the last one here, which is going to be Tesla. And Tesla's already gone through its 200-week moving average, and it does tend to go through there, as you can see. And so if we were to get any further drop there, probably down here at about 227, and then we're really starting to get down there at 215. Let's have a look on the weekly time frame actually there for Tesla. Might give us a little bit more. Yeah, we're not far away from the 200 EMA on the weekly time frame there, but you can see what happens when it goes below that 200-week moving average. It does actually go below it fairly significantly. And so Tesla's one you have to have a little bit more caution with, that when it drops, it really can go, but when it pumps, it can really, really go. I mean, we could literally come all the way down here to around about $175 there, $180, $175. So that would be an area that I would be really looking to load up there on Tesla and add to it. And again, I'm not going in with the whole kitchen sink. I'm being responsible with dollar cost averaging here. And so that's my plays. I am very much seeing this, what the data is showing me, and the data is showing me that these have been historically good times to add and to buy, but that doesn't mean I'm going all in, because if we do have some kind of 1987 or 1929 style of drop and bear market, then I want to have money in hand to be able to even at even a lower price that will average down my cost and bring greater value for longer term plays. All right, that's all for today. And as always, thank you for tuning in. And until the next episode, or until I see you in the Discord, I forgot to mention, check out the description below. You may need to click the more button there. That'll pop out. And there is the Tribal Trades Discord and the Stocks with Josh Discord. In there, you can get signed up for either of those or both of those, and I might see you in there first. Otherwise, happy trading.